So there was actually a multitude of things, and I'll try to again fit this in within 20 minutes because I know 20 minutes is really not that long of a time, and y'all know I can just talk forever. So, um, if you were not on the session last night, if you were not on my session last night, you would not have saw this beforehand. But one thing that we talked about was the treasury bonds. We talked about two levels, actually. We talked about the high from May 25th and the high from April 26th. Okay. So if you mark up both of those highs, obviously you'll see that one of them was tagged and the other one was not. And that's okay, right? Price doesn't always have to run both highs. Sometimes it can just run one, especially after, 3, 4, 5 up days in a row. Like, price is essentially running out of steam here enough to not want to trade above this high. So we do see it trade above May 25th's high. Now, if you also, and I didn't look at this beforehand, just for sake of clarity, okay? But if you look at this, there should be a phenomenon that jumps out at you. It's one thing I've been teaching for many years. It's the consolidation here, that breakout to the upside, right, during New York, because I think New York is open right here, right? So New York starts, breaks to the upside, right? So what's it doing? It's breaking out of consolidation. It's meeting those two lines we just drew from the daily time frame. It's meeting that first daily liquidity, right? So it smacks into that, and hopefully you guys know what to expect at this point. We don't trade breakouts. We fade breakouts. Why is this important? Because, again, these are the treasury bond futures. So if the treasury bonds happen to manipulate on the upside to trade lower, then that potentially means a lower indices, Dow, S&P, NASDAQ. So what I elected to look at, or at least to call for the team, was the Dow, not the S&P, and not the NASDAQ. Although they all relatively did the same thing. Now, I'm glad I slept in today because, to be honest, this right here is ugly. I'll be honest. This right here is horrendous, right? Very, very chop nation. Okay, so to me, there's nothing really special about the NASDAQ that I'm looking at. Took a brief look at the S&P. There's really not anything in this area either. A lot of chop nation, but we're also going to look at this as well. These highs over here. However, if you look at the Dow, all right, the Dow was the one that had some obvious lows, right? You see that? We had a low at 415, and then we had a slightly higher low at 710. So, that sets up a demand zone, sets up a double bottom, whatever the case. So it's like, all right, we know there's liquidity down in this area. And then 30,800 is just the next closest even number, right? Zeros, 20s, 50s, and 80s. Again, that's not brand new, right? So it's like, okay, what have we done this morning? What have we done while I was in the bed on Instagram and Twitter? Okay, here's 8:30. Here's our open. We rallied up, right? And we took London's high. All right, great. We trade down at 9 o'clock. We take some small time frame lows. Okay, cool. We run up one more time. And this is where some people get stopped out. Excuse me. Because they'll think that this run, the first run, above these highs, like, oh, that's the stop run. And I used to fall victim to that a lot. And sometimes I still do, but I want to explain why this ran up a second time. Okay. We'll get to that in just a moment. But the reason that I looked for 30,800 was because I didn't get to the charts until around 9:50, 10 o'clock. And you can see which time I sent that. It was like 10:05. So it took a couple minutes to do the analysis. Okay. But if you look at a 2-minute chart, or a 1 minute, you know, whatever floats your boat. Because that 5 minute is too choppy to see really anything on the 5 minute, in my opinion. But on a 2 minute, and so the idea is that once the higher low is set, then there's going to be order flow essentially until liquidity is met. So if you have your liquidity target down here, 30,800, even when you're up in this area, that's fine. Okay, so now study the price action throughout this area. Okay, we break down, it runs up one more time, slams lower. Look at the aggressiveness here. We rally up into this up candle. We trade lower, trade back up into some up candles. We trade lower, we trade back up into an imbalance, into these up candles, trades lower. And at this particular point, 10:02, 10:04, that's when I messaged them and I said, look, 10,800, bearish order flow. And then a few minutes later, what's it do? It rallies up, but what does it rally up into? Again, on a 2-minute chart, it smacks right into this up candle. Right in here. That's also probably a 618 area right there too. It does kind of meander around for a few minutes. You know, we can obviously all see that. And then what's it do? Boom. Slams right down to 30,800. So this trade idea per se, or, you know, directional bias, I guess, this would have been a scalp, because I was not looking to trade from up here or here. But even though this is late in the I guess trend per se, you know, it's really, really late, and I agree, you know, like that's, prices already dropped quite a bit, and it can be a little scary because it might, you know, you might feel like you're chasing price, but you're not chasing price. You're not, because the liquidity hasn't been met yet. And if it is going to, then it's gonna run there rather quickly. Just like I've been explaining the last couple of weeks, if price is ready to meet liquidity, it's not going to do it casually. It's not going to walk in there, say hi to everybody, you know, and move in slow motion. It's going to be fast and aggressive. And you do see that here. And you actually see that throughout this whole price action. So now let's rewind for a second. I told you we'd come back to this. Now this part right here, hopefully, is going to save you from a lot of shenanigans. And again, just for clarity, I did not see this at the time. It would have given me more confidence, but I didn't see this at the time. The Dow, again, made that high here, which did clear out a couple of previous highs, but then it ran back a second time. So I did not used to understand why price did that, right? Like when you first learn about manipulation, it's an interesting concept. And then when you look for it, usually price, or what we like to see is price run like one time, right? Like take the liquidity, okay, and then run. But then you get instances like this where it runs and then it runs a second time. And that used to bother me so much because I would get stopped out on that. And then I'd watch price dump, or if it was the inverse, I would get stopped out at the low and then watch price moon to the upside. And so an easy fix for my analysis, okay, was again, it all comes back to relative strength. Relative strength. When you look at the S&P, right? Take a look at the S&P. At the open at 8:30, again, Central Time, for those of you paying attention to that. 8:30 Central, stock exchange opens, runs up, boom, clears out London's high, boom, clears out the evening high. Okay, yesterday evening. Great, it runs that, it hits 38.50, there's a 50 level right there, and then boom, sells off. Now, if you were looking for retracements to short, let's go back to the 2 minute for a second. Like, let's say you saw this up candle. You're going, oh, that's an institutional candle. I'll short that. Okay. If you took that trade and if your stop was at the high, the S&P market, at least in futures, you 99.99% positive that you would have not got stopped out on this. Okay, because it never reached this high. And then it slams lower, and then obviously you've seen what it's done. It, just like the Dow, it had bearish order flow down to whatever that low is here. So when the S&P did not go higher here, while the Dow Jones did, this is how you can identify that manipulation. Because that, to me, is what it is. They're distributing longs above a previous high, or they're shorting above this likely both, but I'm trying to give you some context here, okay? Because what's going to be above this high when price starts to break down, right? Anyone who was short here or shorting these wicks to the upside, oh, I got a sniper entry, I got a wick entry. Okay, cool. Where are those stops going? Boom, this high. Cleared out here. Once they're out, that's when the move insinuates. Okay, so just for sake of clarity, I want to put this out here because I want to make sure that you guys get it. That, to me, is why the Dow runs up a second time and the S&P doesn't. The markets, okay, they are very, very, very correlated, but at the end of the day, they are different measurements. The S&P 500, 505 stocks. Dow Jones is only 30 stocks of the largest companies. So although very similar, they are different. Okay, they're different instruments. They have different points, different margin requirements, all that business. So just because the Dow takes a high, let me get rid of that. It keeps warping the chart. Just because the Dow runs this high, that does not mean the S&P has to follow. It doesn't mean that at all. Okay, the NASDAQ, same thing. It ran some highs, but it failed to go higher at 908. Excuse me. The Dow Jones is the only one that did that. That's manipulation. So when you have this set as your high, and then you have bearish order flow with a high probability target, this is when trading becomes not as difficult as you thought. Okay? Because I don't know that this is going to happen, before the market. I don't always go into, the session and go, yeah, I'm expecting for the Dow to trade to the upside and then the S&P to fail to go higher and this, that, and the third. I'm not trying to do that. And this is why a lot of the times on the session, I tell you guys, I need to wait for more information, because the time window for this to happen for me personally is all the way to 10:30. So we're on the live session from 8 to 9, but this can happen all the way up to about 10:30 for me. So if nothing is setting up, I can't do anything for you, because the level of, I guess, predictability for me can only go so far. So I would rather wait, be patient, and then start seeing, right? When the Dow makes a new high, okay, cool. What's the S&P doing? What's the NASDAQ doing? And if all three are doing the same thing, then there's nothing that you need to worry about, because nothing is set up yet. So once this occurs, then once you get that break of structure, then it's like, oh, okay, now the market has shown its willingness to trade lower. It's set the high in. We can start looking for retracements. In bearish markets, up candles are respected, right? So look at these up candles, respected, up candle, respected, up candle, respected, up candle here, respected to a degree. That's bearish order flow, classic bearish order flow. Imbalance right here too. Boom, look at that. All of those price points were reactionary. It's very simple. You can just study it. You can take this candle. You can see that here. You can mark these up candles. You can see that. up candle. You can see that. Up candle. You can see that here. So it doesn't matter if, you know, this is late and you want to miss out, because I used to do that a lot. I used to go, oh, I didn't get this entry up here. I didn't get this one. I didn't get this one. So, you know, I'm sure as shit not going to want to go for this one because I'm late to the party and there's not enough juice in that fruit. Wrong. There's still some juice in that. And here's the last thing I'll say before I shut it down, because I think we've been going about 15 minutes. Okay. Here's the last thing, and I'll let you guys get back to do what you were doing. Oh yeah, that's right. Okay. So when it comes to trading, right? When it comes to risk reward, what's the minimum? What's the minimum risk reward ratio? And a lot of other people already know too. Okay, yeah, 1 to 3 is a minimum, right? So if you cannot frame a 1 to 3, then that might not be a trade worth taking, right? Because the reward is not worth the risk, or the risk is not worth the reward, however you look at it. Okay, cool. So if 30,800 is your level, boom, and price is now trading into this up candle here, can you frame a 1 to 3 based on this? So you can just throw it up here, short position at the candle here. Right now, if your stop was at this high and your target was 30,800, your risk reward is a 1 to 2.5. So that's probably not good enough. So what you're going to have to do is either extend your reward or keep it the same, or sorry, target, or bump down the risk a little bit. So now it's a 1 to 3, and all you had to do was, you know, bring your stop from this high down just a couple of points. This is a fractal high anyway. So you wouldn't want price to trade to the top of this candle regardless. So if you were going for the smallest amount of risk, then yeah, it would be at the high of this, the close of that candle, and that would be almost a 1 to 4. So even though it's entirely late, you can still frame a 1 to 3 idea based on that. And again, this trade did not last all that long. The ideal entry at 1016, or at least the first entry, and then the exit was at 1032. I mean, bro, that's not a long period of time. You know what I mean? And that's why I said it's a scalp. So that's just what that looks like. And all of these in here were easily 1 to 3 or more risk reward, especially here. Right? So it was a combination. Here's the final wrap. It was a combination of the treasury bonds from the daily. Again, we expected that last night at 7, like near the end of the session last night. Okay, so that was like 14, 15 hours prior to that. And then seeing the effects of that, and then having the manipulation, relative strength, bearish order flow with high probability targets. Boom. Okay. So I know it might seem like a lot, and to someone brand new, I would probably be a little bit overwhelmed, but this is why you have to study. This is why you have to backtest, and you really got to get acquainted with the information. So that's just what I wanted to show you guys. That's all that I have for you. So it was a cool day. We still have the afternoon session. So we'll see if anything sets up, and I'll let you guys know. But until then, that's going to be it.